Hey everybody, I hope you and your loved ones are safe, happy, and healthy. Before you listen to or watch the show, remember to subscribe and follow the Mortgage Broker Club on Facebook and LinkedIn to stay up to date with all the latest news and updates. Please note we are not a mortgage broker and do not lend money directly to clients. Remember, a mortgage and/or borrowing secured against your home or property can be repossessed if you do not keep up the mortgage repayments. The content of this show is for information purposes only and is not to be relied upon. Stay well, and I hope you enjoy the show. Welcome to the show. I am your host, Sean Rogers, and I am delighted to be joined on today's show by Brian Coulton, National Account Manager of Payment Shield. Brian, how are things?
All good, thank you, Sean. Yourself?
I'm very good, thank you. Yeah, we're recording this just in the lead up to Christmas. I know we're releasing it in January. So Brian and I are feeling very festive, but with the amount of children we have between us, extremely stressed. Brian, what's the best thing about your role and what is your least favourite?
I suppose the best part of the role is helping brokers and networks get their potential in GI and actually seeing that through to fruition. So seeing a business actually improve the bottom line through the power of GI, it's really good to get involved into the sort of sales process with the networks and also the broker level, and actually thinking about the future of that as well. So where can we take it in the future and what are the future developments? And that's really exciting sometimes in regards to, seeing the light bulb moment switch on, and then also not what are we going to do today, but what can we develop this into over maybe a 5-year plan. In regards to the least favourite, Sean, it actually it's probably, I am missing being out and about since the pandemic, actually getting out and about and meeting people face to face. Although technology like we're on today is proved worthwhile, I still miss the sort of the interaction, human interaction. I think, and that's not just a work thing. I think that's just a personal thing. Although one thing I must say is I don't miss just sitting on the M6. I don't mind driving. It's just the actual sitting in the car that is a little bit of a challenge. But no, I mean, overall, the job and the role is great, and it's something I've been doing for a very long time, as you know.
Yeah, and on that note, you've held a lot of executive positions and senior positions for a long time. How do you find managing sort of your work and, say, personal life balance? Does that come naturally to you, or is that something that you have to work on? Is there anything you specifically do to assist in those areas?
Yeah, it's a good question, Sean, and actually, it is something I have worked on. I think I've got a lot better at it. I think, like many people in the industry, you start off with all best intentions. You're a young man living in a flat, as I was, and then you fast forward sort of 10, 12 years, and there's 3 children and a wife and a dog to consider in the sort of great scheme of things. So I think it's just making sure that you are available on both sides of the coin. And I remember one of my old mentors, still as a mentor to me, who gave me a really great piece of advice, which was always be present. So wherever you are, make sure you're present there. So if you're with your family, try and switch off the work mode. If you're at work, try and switch off the family mode. And I think that's the best bit of advice I've got, really. It's harder to implement than say. As we know, we're all very busy, but I think what leads to you just constantly thinking about work is burnout, and that's not good for anybody. So I think you do need those sort of times to recharge the battery, make sure that you're connecting to the people that you love, and actually get that feeds you with energy then to go back into work and do a great job.
Spot on. Yeah, it's difficult when you're doing everything from home as well, isn't it? I know I spoke with an NLP. I worked with an NLP coach a few years ago, a really top guy in Formby, and he recommended to a number of his clients. I lived on the Wirral, so I had to go through the tunnel. So it was quite interesting. He used to do 2 things, which he'd recommend to people, especially if you had a tunnel or some kind of way home. So one of them was swiping your fast tag if you like to go through the toll booth. That was like the trigger for work stops. I now need to, for the remainder of the way home, prepare your brain for, okay, how do I want to be this evening with the things that are in my control? Because obviously, especially with young kids and stuff like that, not a lot's in your control probably when you
No,
go.
absolutely.
But what you can control is how you come across. So, you know, how much energy do I want to go into the house with? How much focus do I want to have when I go into the house with? You can almost prepare things going wrong and go, okay, well, I can sort of predict what's going to happen. So how am I going to handle them? And just get yourself in that mode. And there's another guy that he worked with who said to his family, basically, look, when I pull up on the drive, don't let me in or anything. I want to take 2 minutes just to sit there, not on phone or anything, just close my eyes and just get back into the zone from traffic and everything, so I can come in and, you know, prepare.
I think I totally agree, Sean. And you know, speaking to a number of people in the industry, I think the change from where they probably were out and about in the car and to obviously doing everything from the desk point of view, I think it has been a challenge for some people, because that drive home was a time to reflect and actually get your sort of thoughts for the day sort of in order. And I think some people do miss that, and you know, there will be people that are struggling out there. And I think what's important is making sure that, you know, you do take those breaks, if it's walking the dog around the block or whatever it may be, and then sort of making sure that you know, reflect, because nobody wants to be burnt out. And I say that is a challenge, and I know something that's close to both, you know, your heart and mine really, and making sure that, you know, we don't, you know, we've got lots of plates spinning. Let's try and not drop any, I think is the metaphor, isn't it?
Definitely. And you've worked with intermediaries nationwide for many years now. You know, without naming them or putting you on the spot, there must be many brokers that you admire. I'm interested in the brokers that have delivered tremendous customer service and scaled their business without sacrificing quality of advice.
Yeah.
What are the sort of typical traits that you see? You know, I'm particularly thinking of maybe brokers coming back into the market or inexperienced brokers. Like what would be the things for them to admire about, you know, brokers who have been in the industry, scaled the business whilst delivering like a 5-star service?
Yeah, I think it's twofold really. I mean, firstly, you know, the brokers that I see that do well, and be honest, Sean, that's majority of them. They're in the role of service. That's why they get up in the morning. But they put the customer at the heart of the business. So everything revolves around the customer outcome, and that's really important. So, you know, the first sort of the thought really is making sure that the customer is at the heart. And there is going to be some new legislation coming out, I believe, from the FCA next year, Consumer Duty Paper CP21, which will talk about having a fully protected mortgage, and that ultimately means, you know, in layman terms, you know, if you're organising a loan for somebody to buy the biggest asset they're going to have, you know, are they being informed about adequately resourcing and also protecting that property? And that plays into our hands. It's something we've been talking about for a long time. So I think that the big thing really from a broker point of view, the ones that do well, they do put that customer at the heart of what they do. It's interesting on the scalability side though, because as we know, one of the sort of constraints on any business, and especially in a regulated world for a mortgage advisor, is actually the paperwork and the compliance trail, etc., which is all needed, you know, to protect the consumer. What we're probably seeing at the moment is a digitalization in that process, and I think having had a number of talks recently with brokers, I think the brokers that we'll see succeed in the future will be the ones that are able to adapt and digitalize the brokerage, but still be able to offer that personal service. And it is a balance of getting that right. But I think the ones that do that will be able to thrive. And there's lots of technology out there to support brokers. It's finding the right solution for that brokerage. And it's really important, really, from a scalability point of view, that, you know, brokers start to think about this, because the future is going to be great, I think, in this market space. If we can have the old traditional values, but use the technology that's about to fast forward into the future and take clients on those journeys, and we're more than willing to support brokers on those sort of conversations as we move forward. But, you know, overall, the broker community is strong. They serve a really great purpose. and they can give that sort of comfort and advice, and that is unparomounted. One of the things I often say, Sean, to when I'm presenting to the brokers is, who is the most important person in your business, and it is the broker. That they are there to serve a purpose, but their clients are coming to them for their recommendation, their advice, and I think don't undervalue that as a broker, because you hold a real vital key. But no, overall, I think the broker community is very strong, and I think the ones that are willing to adapt to change, and continue to offer a world-class customer service, are the ones that will perspire.
And as we record for the last few weeks, almost, I mean, there's always a lot of debate about this, but as we record, particularly over the last few months, November and December, there's been a lot of debate about rising mortgage rates and the impact on the housing market. Markets are betting that interest rates could go to 1.25% by the end of 2022, and lenders have been raising the mortgage rates over the past few weeks. Some are speculating minimal impact on the housing market compared to other issues such as supply of available houses, sellers' expectations regarding the value of the home being unrealistic, as other factors which will cause, let's say, greater harm to the housing market, whereas others believe it may cause big issues throughout 2022 for those who are highly geared, and combined with the cost of living increases impacting on affordability. What are your thoughts, Brian, and what have you heard from intermediaries on these kind of subjects?
Yeah, I mean, my personal thoughts on this, and my wife actually worked in the estate agency market for a very long time, and the view is that there will always be a demand to move, whether it's because of debt and people wanting to reconsider, whether it's because people get divorced, whether it's because people are looking for bigger moving space. I think one of the things we're seeing now is people sort of moving out of the city into sort of more sort of countryside sort of type environments. So I think there'll always be a demand to move. I think the biggest problem that brokers are talking about at the moment isn't actually the interest rates. I mean, I think some brokers obviously remind me that probably prior to my time, the interest rates were very much higher than they are now, and we should be lucky to what we've got. But I think it's the lack of stock which is causing the sort of the blockages in the property market. So demand is there, but actually the stock levels aren't. And what that we're seeing an increase in the remortgage activity, which is really important point, really, because something that we're passionate about here in talking about, because we are now in the midst of the biggest rate roll-off in the last 10 years. We think that's going to continue into 2022. So lots of remortgage activity, product transfer activity. And there tends to be a bit of a blind spot in the broker community when we're doing a remortgage and not having a protection conversation. And we're looking to turn that on its head, really, because I think times are changing from a remortgage point of view. We are seeing people improving the current dwelling rather than move up the property ladder. That's one thing we are starting to see. So things like garden offices, spare rooms, extensions being put on, which actually changes the risk to the habitat. So therefore, it opens up the conversation for home insurance 100%. And one of the things that we're sort of suggesting is that those clients need reviewing regularly on the risk and the needs, and things do change over a client's period. So making sure that the client is being reviewed, making sure that we understand what the remortgage purpose is for. Is it changing the risk? Then actually you need to start having that protection conversation. It's something myself and the team here at Payment Shield are talking to brokers about actively, and we're starting to see that sort of pendulum and the penny drop and that sort of conversation move forward. But it's a real important part of the puzzle, really. But in interest rates, as the question said, we're not seeing it so much of a scare about that from broker community just yet. Maybe we're not as close to it as the lenders are, but I think the biggest thing that seems to be coming through is about the sort of stock levels.
Yeah, with the increase in people working from home, just to follow on from what you were saying, there may be issues with home insurance cover. Whilst most will be okay, anyone who's converted that outside space or maybe created an office in the garage potential need to declare this along with other issues where people maybe have started seeing customers at home or delivering services such as a beautician as an example. How big an issue is this, and what options are available to people? Could there be an opportunity for mortgage brokers there with how people have changed the use of certain areas of their property over the past 18 months?
Absolutely, Sean. I think there is an opportunity for brokers. One of the things that the regulator is trying to push now with different initiatives and legislation that's coming out is that they are really keen for brokers to do regular reviews with their clients, make sure that they're getting the adequate advice throughout their life journey, and that's a real important part. Now, if you look at it from a consumer duty, consumer care point of view, we need to be making regular contact with the clients to say, is everything fit for purpose? Have there been any changes? If there has, can we help you with that? And that goes across the landscape. People's lives do change. It's the nature of being an adult, I suppose. And both you and I can vouch for that. Sort of adult used loosely, Sean, obviously.
Definitely.
Yeah.
Very loosely.
But I think it is an important part. If we talk out the commercial point of view, though, is the beauty with buildings and contents is it's an annual reviewable product. So therefore, you can actually continue to review your client every year if need be, but it's a good contact strategy to keep in touch. So we are seeing, from the feedback we've got from the market, we're seeing 5-year fixes on the rise. 5 years is quite a long time to maybe not have any interaction with a client. Buildings and contents as an annual reviewable product is a great way of making sure that contact strategy is in place and you're reviewing the needs. And as we're seeing, garden offices coming up, people moving to home, what a great opportunity to review the needs of the client. And you start off with buildings and contents, but what else can come after that is amazing, really. And we're, you're engaging the client, every year. And it may be that they need other products and services that the broker's got. So it's a great commercial tool as well.
Yeah, I completely agree. I think it really does help build that rapport as well. And that by reaching out to your clients to almost say, I don't know if you were aware as an example, but
yeah,
if you've converted any outside space or created an office in the garage, you might need to think about declaring that to home insurer, reviewing the policy, that kind of thing. It's a really nice, it's not. I was reading. I did an interview with Joanne Cole recently for Broker IQ, and when we were doing the research for that show, it was interesting that there's still quite a big percentage of clients who think that when other things get discussed by a mortgage broker, that it's because of the commission and because of the sale. And look, of course, there are revenue benefits from it, but ultimately they're doing it, one, because of their regulatory duties, and two, because they do care about that client and want to deliver a great service and look after that client. And I think approaching it in that way, if you like, I think, especially from a communication point of view, I think that's a great way of genuinely building that rapport, because you want that word of mouth. And like you say, on a 5-year deal, you could have done the best service in the world, but if you're anything like me, I'd struggle to remember 4 or 5 years ago the details of them particular people.
Absolutely. And I think the consumer duty bit is paramount, and it's a softly approach rather than a harsh approach. And I think that makes it, and as we say, we know that the regulator is pushing for regular reviews anyway. So it sort of falls in line with a lot of the stuff that the regulator is wanting to happen, but it also does have that commercial benefit. You're completely right. Making sure that the client is serviced and that they're getting the right policy for themselves. That there is a tangible benefit to the brokerage, which we often talk about. So it's great to see all those sort of strands being pulled together.
And for those that don't know, please, can you summarise Payment Shield and the services you offer for intermediaries?
Yeah, no, absolutely. I mean, the Payment Shield is probably well known. It's been around a long time. But for the ones that maybe need a refresher or aren't familiar with what we do, we ultimately are an insurance software house. So we offer a really slick, easy system for brokers to be able to write home insurance, buy-to-let insurance, and AS insurance at the moment. So on the back of the mortgage, home insurance or buildings and contents is a compulsory product, right? There's a mortgage in play, the client has to have buildings insurance. So rather than letting them go off to direct aggregator sites, etc., it gives the broker an opportunity to add that service and added value benefit to the customer, making sure that the customer's insured correctly, because all our policies are 5-star de facto. But also then from he'll turn it back onto a commercial point of view, it's tying the client in because it's a product that the client needs and the broker is able to service. And we've done a lot of work in making sure that we get both the premium and the speed of the quote right. So it's not taking brokers an onerous amount of time to do it, but we're also able to get a competitive premium on that. We wrap that all around with support and education. So we've got a great team here at Payment Shield that are on hand to support brokers in anything that they need really to get them up and running. So any level of where they're at with it. So whether it's products and systems training, whether it's coming in and actually training up an administrator to give them a gateway into the financial services world, which often is building confidence, is great grounding place on that. Whether it's actually looking at sales process, like how do we actually fit this in, into the sales process, and what are the key buzzwords. We can develop a plan for a broker and a brokerage to make sure that they're getting the most out of the opportunity. And the ones that sort of buy into it and actually work with us on that, we do see some great successes. And as I say, it all goes to the bottom line. It ties the customer in, but ultimately your customer is getting a 5-star de facto policy and getting their property, which is the biggest asset they're going to own. It's not a property, it's a home, it's insured correctly. And we're really proud of what we do here at Payment Shield.
And I was reading Payment Shield's analysis that shows remortgaging product transfers account for approximately 20% of all mortgage transactions handled by intermediaries, which in turn creates an opportunity for over 200,000 approvals annually and a potential commission for advisors of just under £17 million. The study said that indicative market research suggests that the actual quote commission earned by advisors each year was 937,500, resulting in a black hole of nearly 16 mil. That means advisors are only quoting on 5 to 6% of the total remortgage opportunity. So why do you think advisors are only quoting on 5 to 6% of the total remortgage opportunity? And how would a broker go about adding this into their remortgage services?
Yeah, it's a great question. As I say, we sort of touched on it a bit earlier, didn't we? But I think just a bit more of a deep dive on this. There's around £16 million as a broker community left on the table for not quoting on GI, just GI alone. So that we know that protection overall gets lost at the remortgage stage, product transfer stage. I think historically the sort of concerns would be time. Brokers, clients got it elsewhere. They're already sort of with somebody else. How can I cancel a policy, and is there a charge? And we do a full presentation on this, and we'll be happy to go through anyone who wants to know to sort of how to navigate around this. The first thing we would say is you need to be treating every customer the same. So whether they're a home mover, first time buyer, or remortgage client, they all need a protection conversation, because things may have changed. We need to make sure that the property is being insured correctly. And the easiest way we found that the guys that do really well in the remortgage stage is they actually ask for a copy of the insurance document as part of the vetting process for the client. So they've got the current insurance document in front of them. What that allows them to do then is, via the system that we have, and there are other systems out there that have the same sort of capability, you can actually do a sort of research piece against the policy that you're proposing and the policy they've got. Now, if they've taken out a cheap and cheerful policy previously, what we know is that a lot of those cheap and cheerful policies will have cover removed, typically things like trace and access, alternative accommodation, accidental damage. So the ones that aren't a favour with trace and access, effectively, if there's a leak behind the wall or under the floorboards, they will come in, knock the wall down, pull the floorboards up, find the leak, fix it. But without trace and access cover, the cost of putting the wall back up and the floorboards back down lies with the client. It can be really, really costly. Accidental damage and escape of water are the two biggest claim areas in the UK, right? So they're the ones the probability of people claiming is a lot higher on those two aspects. So what cheap and cheerful insurers and insurance policies will do is they'll just remove that bit of cover because it's mitigating the risk for them. They can charge a cheaper premium, but it's not mitigating the risk for the client. And if you follow me on LinkedIn, I often post about these sort of stories that get picked up in the mainstream media where client thinks that they're covered for something, and then they find out that they're not, too late down the line. So I think, firstly, having that sort of educational piece with the client to say, look, you have got this in place, but did you know this, and this isn't covered? And that can be very sort of visual on the de facto piece. What it also then allows you to do, though, is actually compete on price. So you can see what you're up against on price, so you know where you're at with that. Now, we know that sort of the model in the aggregator sites traditionally has been, the headline rate to get the client on board, and then they sort of put it up year on year, and it's been quite dramatic how they put it up. So therefore, 2 years down the line or 5 years down the line, you're probably being able to compete on an okay price point as well, although that is likely to change, which we'll come on to in a moment's time. The next bit then is, making sure that the client cancels the policy, and this tends to be the biggest sort of objection. Is the client's already got a policy in place. It doesn't, the renewal date of the home insurance policy doesn't tie in with the mortgage end date, and so how did it get out of it? Now, typically an insurer will charge £30, payment shield don't, but an insurer may charge £30 cancellation charge to say, year one out is £30. And there's two bits on this really. Is one, it's do the simple maths. So if you save the client more than £30 over the course of the year or so, like you've made that saving. There is an option to be able to defer the payments on the payment shield system, where you can give a sort of break so that the premiums wrapped up over 9 months, not 12. But from my personal point of view, the Brian Coulton point of view on this, I don't know any other product or service that, if you've deciphered and you've been educated by somebody to say the policy you're paying for, or the service you're paying for, or the product you're paying for is not fit for purpose. I don't know anybody that would continue to pay for that, except from the insurance world. And I think if you were to ring your incumbent insurer and say, we don't think this policy is now fit for purpose, I myself, I would be challenging the cancellation charge if I knew it wasn't going to do what I wanted it to do. So I think that's a real important part, to look at. But ultimately, what it comes down to is making sure that you are having that conversation with the client, you're educating with them. You're not going to win them all. And if you don't win them, what you can then do is direct to give them a call back when the renewal date is up, and you gain them back in that way. But it's a really important part because, as we say, we know that moving into 2022 and actually this last quarter, remortgage activity is going to be at an all-time high.
And so in terms of some of the challenges then, if brokers were thinking about going into this, I'm guessing the hurdles to overcome, if you like, both for the broker and for you and others to form a successful partnership in an area like this, if you will, that obviously there's time is so precious. People don't tend to have much of it anyway. Then there's obviously building it into your sort of triage, for want of a better phrase, and your fact find, and then obviously having the knowledge to go with that. Do you see any other hurdles or objections, if you will, or problems to overcome? And how do you overcome? I know you touched on it then, but how do you overcome some of them challenges with people? If a broker was listening to this, interested to work with you, like if it was me, I'd have them concerns.
Absolutely. I mean, we've got a great team that will come in and actually bespoke the training and what you need to the brokerage, and whether that is sales process and building into the remortgage sales process, which isn't much different really if you think about it, to a home mover, to a first-time buyer. It's we can certainly support the broker with sort of the sales process part. We can also help them with some of the objection handling, which we've just talked about. I think the time issue, it doesn't take a lot of time to do a quote, but the truth is it doesn't. And the more people you quote, believe it or not, the more policies you'll sell. So that's a maths point of view. But I think ultimately the broker wants to do a good job, and if you've if you've done the sort of research up front and said this policy isn't fit for purpose, if you're wanting to do a good job, you need to get the client across to the right policy. And I think the two biggest elements normally are, I can't compete on price, but you may be able to at remortgage stage because we know that the price may have gone up. You certainly be able to compete on the quality of policy, and it's bound by advice. And then you've got to decide, is that worth your time? I would suggest it is. And then you've got everything the client needs, with inside the sort of financial services package, and it's a protection for yourself, because if buildings insurance is compulsory and you're letting the client go elsewhere, in a world of big data, what else is that client being offered? Because that can start tapping into your other income streams and revenues. So there is a sort of self-preservation point of view on this as well, Sean.
1,000,000%. I completely agree with you on that. That I think it's a future bank of work, almost protection for you, isn't it? In that,
absolutely,
ultimately convenience is king, isn't it? And like you say, the minute you start going elsewhere for your GI, the minute you start going elsewhere maybe for any estate plan, the minute you start going elsewhere for protections and stuff like this, then someone there, I mean, you don't know whether they're looking to refer to other people, because everyone has their own referral network. So if they don't do it in-house, they're going to have other brokers
their own ecosystem. Absolutely, yeah.
Want to do referrals to in any event. And also, like you say, convenience wins, doesn't it? I know a couple of people I work with in various areas, and that's the big selling point for them, that then binds complete loyalty because of that convenience. And also because there's so much going on, there's so many good touch points with the client, it's easier to keep in, let's say, regular dialogue or do that review, isn't it? Because someone said to me, I want to just do a review on your mortgage. Okay, if I need to do a review on your life, your critical illness, your income protection, your GI, why don't we just go for a quick butty? Why don't we have lunch or in the office or whatever? It kills you both with one stone.
Stuff we've been talking about for a long time, the holistic approach, you're a one-stop shop effectively for that client. And that's what you need to do. I mean, one of the things that we often say to mortgage brokers is, don't just class yourself as mortgage brokers, you're mortgage and protection brokers. And that's a real important key.
1,000,000%. I was reading about the Go Academy being live. For those who may not know, can you explain what it is and how intermediaries can gain value from it?
Yeah, absolutely. One of the sort of major pillars here at Payment Shield is around education. So making sure that we are giving the tools and the ability for brokers to upskill themselves, and both for themselves, and actually we have a lot of stuff that they can then use to help educate the client, because it's an education piece. It comes from ourselves to the broker to the client. The GI Academy really is an online site that a broker can go onto. There's lots of information on there that they can either download and use with the client, or they can actually upskill themselves. And actually, by going through the GI Academy, they can also build up the CPD hours, which, as you said, we're just before Christmas now, so there'll be lots of brokers trying to get those 15 hours in, I'm sure. That type of sort of site is there to support brokers in getting those sort of 15-hour CPD and actually being able to give them the nuggets and the wisdom to take away to impart. This isn't just a tick box exercise. This is giving the brokers something tangible that they can take back into their brokerage and use. And we're looking to do a lot of work around that moving into next year, including actually maybe some educational pieces for clients, which brokers can direct their clients to as well. So watch this space.
And also, there are new rules coming out from the FCA on the GI pricing study. You touched on it before. How is that going to impact on brokers, and what kind of problems or opportunities does that present? I know you touched on it before. I just wonder if we can go a bit deeper into that.
Yeah, look, we think it's the right outcome for the customer. Certainly, I think it's going to create an opportunity in the broker market, because it sort of levels the playing field between the intermediary and the aggregator sites. That's our belief that's going to happen. So not only are you going to be able to compete on quality and the advice, but actually the pricing points should become a lot more closer together. So we think there's a huge opportunity for the brokers in that market. And I think the smart money moving forward into next year, and I know the regulator is looking at this with other legislation that mentioned CP21, is that brokers start to engage clients on both the mortgage and protection side, and if they do that, and as we mentioned before, they adapt to the changes that are coming through and use the technology that's available to support that, I think brokers are on for a great 2022.
And what does 2022 hold for you and Payment Shield, Brian?
Yeah, I think we're really keen to see how the market reacts next year. We've had a great year this year. I think what my own opinion was that sort of when the pandemic first hit, so we're going back 2 years ago really now, aren't we? But when the pandemic first hit, I think brokers were looking for other revenue streams as a matter of course, and we've not actually seen that stop. We've seen brokers sort of continue the good habits, and we've been supporting that in regards to doing the ancillary conversations and getting those products in. We want to make sure that continues into 2022, and from our point of view, we're looking forward to a really successful year in next year like we've had this year, in regards to working with our partners, making sure they see the value in GI, not just for themselves, but actually also for the customer, which once again I think will be under the spotlight a little bit more by the regulator in 2022. But we're in a really strong position to prove that's what we do as a community. The broker community, if anything, is resilient, and that's really testament to everybody in the industry. We weather the storm no matter what comes, and we continue to move forward together. And I think protection has a large part to play in that for both the broker and the clients.
Thank you, Brian. Thank you for being such a fantastic guest. And
thanks for having me, Sean.
No, it's been a pleasure, and thank you for listening or watching. If you want any further information on Payment Shield, please check out the links below. We're going to be putting out the links to Payment Shield and also Brian's LinkedIn link, so I'd recommend giving him a follow on LinkedIn if you don't already. Please share and spread the word about the MLC show for property professionals, and if you're listening on Apple Podcasts, I'll be cheeky again and ask for that 5-star review. Remember to check out the products and services at mortgagebrokerclub.co.uk, and more importantly, please stay well and take care.